The Beatsmiths. The Beatsmiths. beats this?
Hey, Johnny.
Hey Neil, how you doing?
I'm wonderful, man. How are you doing?
Good.
I think we are just gonna listen to some tunes and chill out for about 14 minutes.
Sounds good. Should get my
We are streaming live on YouTube.
okay. So no bad words.
No bad words. I know you. I know you like to swear.
Um,
Not live. What's up?
did you have a link for me?
Yep, I got the link. I'll send it to you directly.
Okay, thank you. Did you send it via email?
No, I sent it in the Zoom chat.
Okay.
Sylvester, it's Gianni. Gianna. The girl name.
Yeah.
What's up, Sel? Good, man. Good. Glad to have you here. I'm super excited for today. Last time Gianni and I did a session. It was a lot of fun. Got some new tickers today.
We do. A couple new winners, which is always nice.
Very good.
On AG, Sylvester, are you talking? Were you at the Power Hour?
She comes
Yeah,
to everything.
that was a big one. Well, I'll be back this upcoming weekend, the next one, so be sure to tune in. Yeah, and Marvel too. That was a big winner for us as well.
Hey guys, this is not the official webinar. This is just an informal chitty chat. Feel free to jump in. While we're counting down, we've got about 12 minutes until the session really starts. Why don't you drop your name and where you're from in the chat?
Yeah, I still like Marvel, Sylvester. And then you talking about corn like the commodity? All commodities are rising. Price of corn's almost doubled since last April. So I don't think we've seen the prices reflected at the store yet, but in due time.
Hey Daniel, hey Bob.
I think all grains will, Sylvester. Even livestock.
Shout out Michigan.
Michel from Montréal. Salut, mon ami.
Darnell from NYC. Are you 212, Darnell? Hey Abdul. 347, all right. So you got 313 here.
Yeah, I'm 734 now.
Represent 734. That's my dad's area code. 702. Yeah, everyone, give us your name and your area code in the chat.
West Palm Beach. Nice.
Pakistan, welcome, welcome.
Very cool. How to make money on
Austria.
Austria.
I'm familiar with Austria. I know it's in Europe.
It's on the eastern border of northern Italy.
There you go. I believe it also borders France near a massive fort.
Actually, no, I don't think.
No, it borders Germany.
Germany, yeah.
Neuschwanstein is Castle Neuschwanstein. It's a beautiful,
Yep.
beautiful castle near the border of Austria and Germany. Check me on that. If I'm wrong, I'm gonna feel dumb, but that's okay.
No, I'm pretty sure you're right.
I don't know why I thought France. I've been playing this game called GeoGuessr lately.
Oh, really?
Yeah, it drops you in a place on Google Maps, and you got to figure out where you are. Super fun. GE chart. Are we gonna go over a GE chart today, Gianni? I know that Gianni's got a bunch of stocks that he wants to show you, so any stock picks we'll just have to try to fit in after he gets through the stuff he wants to show.
So, Sylvester, you hear me talk about definitions and the importance of them. Cup and handles, I usually don't like to see those in terms of reversal. Now, if you want to call that on GE a rounding bottom, you can make a case for that. But a cup and handle is something I like to see in an existing uptrend.
Here you go. Hey, Ralph.
Infin looks good.
Yeah, a lot of people have been talking about that one.
So does RMBS. It's an uptrend. Missed the entry on RMBS, but if you got it, hold it, I would say.
Did you see Litecoin's pattern?
No. Did it happen over the weekend or something?
No, it's just resolving a double bottom over that long period, very similar to what Bitcoin just did.
Yeah. Yeah, it has that nice saucer or whatever. It's at
Yep.
multi-year highs. It's actually breaking out this past week. It's up 40% in the last 7 days.
Let's go. The dog, the Doge, Donkey Coin. No one pronounces it.
Is it
Yeah,
Dogecoin?
it's Doge. Yeah.
Yeah, Doge. That's what they used to call the dictators of Venice. They had like a revolving dictator, and they were called the Doge.
Really?
Yep. Markets are closed tomorrow, Steve. President's Day.
The Doge. I've got Elon Musk's tweets alerting me.
Yeah, that guy.
That guy.
He knows he's so smart. He knows how to speak so cryptically to avoid the regulators.
uh, yeah. Canada. Got some folks from Toronto here. Lemonade. Not sure about lemonade. I'm more fundamentally aware of lemonade than I am about
That's another
chart.
coin, isn't it?
No, lemonade is it's a stock. It's a fintech.
Oh yeah, I've
Fintech.
seen it. Yeah.
Yeah, and
LTHM, Jacob, that's on my watch list. We haven't quite triggered the buy yet. Where we at time?
still got a lot of time.
Okay.
About 6 minutes.
I still like pot stocks, Thomas. I mean, we pulled back pretty viciously in the toward the end of the week, but as long as you form a higher low, I think they'll still work their ways higher. I mean, we saw resolutions out of some multi-month, in some cases even multi-year reversal patterns. So I'm pretty constructive on pot stocks. Now that being said, I think the favorable entry point is generally passed. But if you want to try and nibble some on the pullback, go ahead. That's not really my style, but as long as you manage the risk.
Just a little bit of housekeeping as we're in the long, or whatever you call it, we're about to start. We are talking stocks here before we get started. Don't be intimidated if you're brand new to the markets. This is for you just as much as it is for folks that are more familiar. The idea of this session is to go through Gianni's trading style, which is heavily based on... Gianni, what would you say, if you could define your trading style in one sentence, how would you do it?
Momentum.
Gianni is a momentum trader. And would you say that it's pretty beginner friendly?
I'd say it's the most beginner friendly strategy out there.
So it's it works. Gianni has a lot of trades he's going to show you today. I trade with Gianni. I love his picks. So don't be intimidated. Also, if you're a veteran or think you're a super serious trader, we still got something here for you today. So it's going to be a great session.
Sure will.
And 4 minutes to go.
So Sylvester, Tech was consolidating relative to the market for a few months there, but the ratio between Tech and S&P is at new all-time highs. So I think Tech, I wouldn't be shorting Tech. It was one of those situations, instead of shorting it, you just don't add, and that's kind of how it was the last few months. And now we're starting to outperform again. So that's a secular trend you don't want to bet against. Uh, yeah, we want to trade on the close as much as we can. We'll talk about that. We want to trade at the end of the day. Well, Sylvester, the money's coming from all those Vanguard funds and the Fidelities. People putting money into the 401k. Those large institutional entities. They're the ones pushing up the price of those stocks. We want to trade with the institutions, not against them.
Hey, really quick, guys. Everyone that's here right now, do you guys have a hard time getting in? No problem. Did you guys get an email right before we started?
I got an email, too, Neil.
Yeah, I did too. Did you guys use the link in that email? Yep. Okay, cool. Thanks, guys. Just making sure. Just making sure. All right, 2 minutes. One minute to go, guys. If you're just now getting into the Zoom, let us know your name and where you're from. Yeah, thank you for the compliments on the music. You can find this playlist if you open your Spotify account and type royalty free in the search bar. Hawaii. Oh god, I'm so jealous. Nigeria. From Nigeria to New Jersey. All right, as always, now that it is 1 p.m. New York/Detroit time, we're going to give it just one more minute for folks to trickle in. Make sure you're letting us know where you're from. Give us the tickers. Let us know your favorite tickers of the week, of the month. What are you liking? We're going to get started with Gianni very shortly. Let the tickers flow. BNGO.
Bingo.
Bingo, baby. Loving what I'm seeing, guys. Loving what I'm seeing. We got the streaming, we got the genomics, got the LiDAR, got the gaming, tech. Good stuff, guys. All right, Gianni, I'm going to stop sharing this little splash screen right now and hand it over to you. Sound good?
Sounds great.
All right, guys, really quick, normal housekeeping. You are at the Benzinga Breakout How to Trade Breakout Stocks webinar with Gianni DePoce. Gianni, it's a pleasure having you here with us today.
Pleasure to be here as always, Neil. Thanks for having me.
The pleasure is all ours. Gianni, for the folks that don't already know you, could you please give a brief introduction to yourself? And, no rush here. I want you to get your presentation open. I don't want you to have too much going on here. So get that sorted out. But, just give folks an introduction to yourself and give folks an idea of what they're going to learn from you today.
Okay, sounds good. So hello, everyone. My name is Gianni DePoce. I am a trader and analyst. I've been in the markets now for about 9 years. I was in the advisory world for about 6. And during that time, I worked pretty closely with various institutional entities in the market. Your Fidelities, your Vanguards, your Schwabs, those type of market moving folks. So during that time, I kind of learned their tactics and style of trading, and through trial and error, incorporated some of their own tactics into my own. And what we like to do is trade reliable, favorable risk reward setups. So we want to focus on breakout stocks on the precipice of breaking out so that we can maximize our return while minimizing our risk. So we're going to focus on a variety of price patterns here today. I'm going to show you some real live examples, and then we're going to talk about, some of the ways that we use to find those stocks, and a couple other things too. So without further ado, allow me to share my screen here. And so we're going to talk about how to trade breakout stocks. Let me get my laser pointer up and ready here, because that's always nice to have. Laser pointer. Okay, Neil, can you see my screen nice and good?
Yes, sir.
Okay, so let's go ahead and get started. So what are some of the breakout tools and concepts that we use in order to do what we do, right? So we start off with technical analysis. Technical analysis is the study of price patterns and chart patterns, momentum oscillators, basically human behavior plotted onto a chart reflected via price. And what's so amazing about technical analysis is you go back hundreds of years and you plot these price movements on a chart, and the patterns that we see are pretty much the same that we see today. So what does that tell us? Times may change, technology may change, but human behavior doesn't change. Yeah, there's different cultures around the world, but human nature is basically the same everywhere you go. Okay, so we do this. We use technical analysis to spot opportunities ahead of time. And why is that? Well, because the best, I don't want to say predictor, but forecaster of the future is the past. History doesn't repeat, it rhymes. Okay. And we also use technical analysis to manage risk. Okay. So those of you that have been, participating in our webinars in the past and following our work and subscribing or whatnot, know that we obsess over risk management. And one of the best ways to help us manage risk is technical analysis. It can be as simple as setting a stop loss below support, knowing what price point is going to be most effective, to cut your losses and run if a trade's not working out in your favor. But at the end of the day, we want to make sure that we are keeping our capital intact as much as we can, because we have to approach trading like a business, right? And with every business comes business expenses. Losses are unavoidable. Every trader that exists has losses from time to time. And the good news is that you don't even have to be right most of the time to be profitable, so long as you're managing risk properly. Okay, so If you view your trading capital like your business inventory, okay, you have to cut your losses, because if you run out of inventory, you're out of business. If you run out of capital, you're not trading. Okay, so we have to stay in the game, and that's important. That's why we focus so much on risk management. Another reason why we like technical analysis is that we're operating from the premise that sentiment follows price, not the other way around. Okay, so one of the greatest examples of this is go back to March of 2020, or even late February 2020, when the market was crashing. The market collapsed 40% in about a month. Okay, the world was ending. Nothing was ever going to be the same, and things are slowly but surely moving back to normalcy. But that is a excellent example to the notion that sentiment follows price, not the other way around. That was the best time to buy. So, like Warren Buffett has said before, you buy when there's blood in the streets. There's nothing really unique about him for saying that. That's just a basic behavioral economics concept right there. You want to be greedy when others are scared, and I guess more cognizant of risk when others are greedy. I don't know that we're fully in a euphoric environment right now. We were, I would say, mid-January, but that pullback that we had heading into the end of January really served to shake out some of the weak hands in the markets. We saw, some of the excessive bullish sentiment reduced notably, and that proved to be a catalyst for the next move higher. And additionally, we formed a significant higher low in many markets, gave us an opportunity to see what markets exhibited relative strength, which is a concept we'll talk about today as well. And so needless to say, that pullback was very welcomed from the long side. And then lastly, I kind of alluded this to already, when we're operating in the market, you start to see an order to the chaos. So, there's a natural order to our world. It's not that things are random. It's just that you don't see the pattern. And once you see it, you can't unsee it. There are no coincidences in nature, just like there are no coincidences in the market. Nothing happens in a vacuum. What happens in one market sector or asset class will have an effect on another. I mean, even go back to late January when we had the AMC and GameStop short squeezes, okay? So many institutional entities were short those stocks that they actually it seemed like they had to go and sell their other holdings to raise cash for their margin calls, okay? So again, that's an example of how what happens in one market will affect another. Another one might be, rising crude oil prices, which is something happening now, highest price in over a year, is going to increase inflation expectations, which in turn will increase interest rates, because interest rates tend to be a function of inflation rates. And we'll talk about that a little bit more later on in this presentation today. So let's talk about some chart patterns that we use. Remember, we talked about how we like to be focused on momentum style trades, and many times that concerns buying high and selling higher. So, those of you that might be new to the industry probably hear, buy low, sell high, yada, yada, try to catch a falling knife, or, stop a bottle rocket from going up. That's actually one of the harder ways to trade, believe it or not. If we capitalize on momentum, take advantage of ourselves being individual traders and investors, we have an ability to enter and exit positions without showing up on the radar. The large institutions can't do that. If a Fidelity Growth Fund wants to buy a stock or sell a stock, they're going to move the price of a security. The fact of the matter is, unless you're trading hundreds of millions or billions of dollars worth of money, you're just a blip in the radar. Okay, and that's great. So to use a military analogy, we can act as snipers or silent assassins, whereas these large institutions are like Moabs, mother of all bombs, or heavy infantry. We have to use that to our advantage. Okay, so the good news about these chart patterns is that they work the same across all markets. So whether you're trading stocks, Forex, crypto, or futures, the chart patterns are so important, because once you learn to spot them, the benefits will compound on themselves. You'll be able to apply them to all different markets. I generally like to tell people that the best market to start trading is in stocks, because it's not leverage, it's a cash market. Crypto's cash too, but the rules are kind of a little bit different for one reason or the other. But Forex and futures are highly leveraged. If you're new to the game, I would suggest you start in stocks, and I am speaking from some experience based off my early days in trading. So take that with a grain of salt. But the main chart patterns that we want to focus on today are the continuation patterns and the momentum patterns. Okay, there's an additional category that I like to consider, and that's reversals. But remember, we're focused on stocks that are on the precipice of breaking out. And for all intents and purposes, for this conversation that we're having today, this means that we need to focus on continuation and momentum patterns. So my favorite continuation patterns are the triangle family. We have the ascending, descending, and symmetrical triangles. Okay, I have some examples of those here today. Those are good. So the continuation pattern, what does that mean? Well, it's continuing. Continuing what? The trend. The trend is your friend. The trend is your friend until the trend ends. The longer the trend, the more powerful the trend. The shorter the trend, the less likely it is to be your friend. Okay, so if we see a market in an uptrend as characterized by a series of higher highs and higher lows, and we spot a continuation pattern, we can say to a high degree of probability, because remember, all we're dealing with here is probabilities, no certainties, okay? Probabilities, that the pattern will probably resolve in the direction of the underlying trend. So if we spot a continuation pattern, as soon as we see the stock start to resolve itself from that pattern, we're probably about to see a breakout, okay? So we have the triangles, ascending, descending, symmetrical. We have the rectangle pattern, and then the ascending and descending price channels, okay? For whatever reason, it's just crazy how the market seems to work like this sometimes. We've been hitting quite a few licks on the price channels as of late. And, it really just comes down to you have to play the hand that the market deals you. I'm not beholden to any particular price pattern. I'm not only going to trade off of a saucer or a triangle. You need to have a nice variety in your arsenal, okay? And look at it this way. These chart patterns are like part of your armory, okay? They're part of your arsenal, your trading arsenal. So then we have the momentum patterns, okay? And these are really some of my favorite ones to trade because they're powerful, the momentum, right? We have the saucer pattern, the broadening wedge, which is especially one of my favorites because it's one of those things where, the more the people use a certain, indicator or something, it might not work as well. So I don't want to call it like a holy grail, but it is kind of like a secret sauce, if you will. So the broadening wedge is one of my favorites. We've had a few very strong winners based off that. I think I have a couple examples of this, at least one, maybe two. Then we have the cup and handle. This was a price pattern made famous by a renowned trader and investor, William J. O'Neill. He's influenced my work pretty significantly. He's also the founder of Investors Business Daily. We have the bull flag. I think I have an example of this pattern too. If not, it's a variation of it of the sort. So when you see a bull flag, just be cognizant that it kind of ties into like the pennant pattern as well. And the example I have might actually be a pennant. So that's why I wanted to, digress into that a little bit. And then the rectangle, I added that here too because they seem to work in momentum as well. So let's start off with the saucer pattern here, okay? So this is an example of a stock that we're currently holding. This is a daily chart of Teladoc Health. Okay, so as you would probably know, the virtual visits to, doctors and medical professionals has increased in the last year or so. And this stock that specializes in providing those services has caught a nice bid. So we're only looking at a daily chart here, but you zoom out and you look at a weekly chart, this stock has been on an absolute tear for the last 12 months or so. So here we have a saucer pattern. And how do we identify, or how is a saucer pattern characterized for traders? Well, we first note an upper horizontal trend line acting as resistance. So what is resistance? Resistance is when prices are rejected by a certain level to the upside multiple times. So we can see here that this price is around like 240 or so, this level of resistance. Okay, and we were rejected by it 1, 2, 3, 4, maybe even 5 times. Okay, so we can see that this level of price is very important. And if we clear that, is probably a good indication that we're about to see a breakout. The second component of a saucer pattern is the parabola U-shaped figure underneath the upper horizontal trend line. Okay, so since we're talking about resistance, let me add another bit of advice for that. Whenever resistance breaks, it becomes support. On the flip side, whenever support breaks, it becomes resistance. So we're not going to show a lot of examples of, support becoming resistance because we're focused on the long side here today. But just as a principle to take away from this discussion today, that's one I think that you should focus on. So in any case, this Teledoc stock was sent out to our elite subscribers. So those are the individuals that receive our trading alerts 3 times per week with up to 3 trading ideas per issue for which means that you could get up to 9 trading ideas per week. Last week, I think we had 7. But basically, if the market's firing on all cylinders, you get more trade ideas. If not, you'll get less. Sometimes it might just be 3. But we have about a 20 to 21% gain on this. We issued a buy point on a close above, I think it was like 231 or something. That was achieved. We ripped higher. And I think the stock continues higher. I mean, looks like we have some sort of a bull flag ascending triangle pattern here as well. The RSI indicator is confirming too. So I like this stock. I continue to like it. Teledoc Health, TDOC. The next one, next example of a saucer pattern is Fubo TV. I'm sure this one has caught your attention, but was anyone telling you about it last summer? Because that's when we were alerting our subscribers to it. So once again, we have a saucer pattern, an upper horizontal trend line representative of resistance. Okay, we were rejected by this. I think it's like a $10, $12 level. We were rejected by it 1, 2, 3, maybe 4 times, and then we have the parabola U-shaped secondary portion of the pattern. So we issued a buy signal for subscribers on Fubo. I think it was on a close above 1230 or so. So we just ripped higher. I mean, we had, I think it was like 190% gain turned out to be in about 2 months. And we got out in mid-December, and look where I issued the sell signal for subscribers. Okay, we didn't sell the high. But what I want you to take away from this is that you don't need to buy the low or sell the high to make a good living in this business. Because look what happened. We missed the next 2 days higher, but then by the following week, prices were right back to where we sold them at. This comes down to opportunity cost. A lot of times when stocks start to move in a parabolic fashion like this, you have to be able to control your emotions, and it's easy to get carried away. So now what am I seeing with Fubo again? I think Fubo is about to be a buy sooner rather than later. If we can get a close above this $50 to $52 mark, I think we see Fubo hit $100 or even higher. So, that's another good trade idea. I also want to draw attention to all this volume down here at the bottom of the chart. Okay, look when we issued our buy signal. We have a 20-day exponential moving average. There's a little red line, if you can see it, but it serves as an indicator for us to see if there's significant trading activity happening on a stock. So if we see volume start to trend above the 20-day exponential moving average, and we start to see prices rise during that, it's a pretty good indication that accumulation is occurring. So we'll talk about that a little bit more later on in this presentation as well. But yeah, like I said, this was a great example of a saucer pattern. We hit a nice lick for subscribers, and I think, I might even be issuing another alert for this stock in the next week or so. All right, let's talk about the broadening wedge. I told you this is one of my secret sauce patterns, and this is another stock that we currently hold. This is a daily chart of Cloudera. And this was also issued for our elite subscribers, and we're up about 50% on this position. And this is over the course of about 2 months, 6 to 8 weeks. And the broadening wedge pattern is represented by an upper horizontal trend line acting as resistance. So we see here that, we can even extend this back here, but prices were basically having trouble around this, like $11.90, $12 mark. Okay, then the secondary portion of the pattern is a descending lower trend line. Okay, we can see how prices bounced off this descending trend line 1, 2, 3 times. Once again, the buy point is on a close above the upper horizontal trend line. Look at what volume did when this happened. That is a telltale sign of significant accumulation taking place, and that is when our buy triggered. Okay, and it's been very rewarding for our subscribers. Like I said, we're up about 50% in about 6 to 8 weeks. Can't really complain about that. Here's another broadening wedge, and this is an example of Snapchat. This is a weekly chart. So remember, these price patterns, you can observe them on weekly charts, on daily charts, and I would even argue on monthly charts too. Now, remember, the bigger the base, the higher the space. So a price pattern observed on a weekly chart or on a chart of a longer time frame is more important or is more significant to you as a trader than something witnessed on a daily chart or an intraday chart. So keep that in mind. It's very important. So once again, we have an upper horizontal trend line representative of resistance, and then we have the lower descending trend line acting as a downward sloping level of support. So we rejected this downward sloping trend line 1, 2, 3 times. Resistance was rejected 3 times. We issued an alert for subscribers. On this one, I think it was back in early June. My memory, this was almost a year ago, but we basically came away with a 60% plus gain in about 2 months. So once again, we didn't sell the high, but there were some indications that the rally might stall out. And, we really didn't rally that much more in the subsequent weeks afterward. I mean, now it's starting to move again, but I do think that there's better value elsewhere in the market right now, especially after a move like this, in Snapchat. So this is a good example of another broadening wedge. All right, cup and handle. So this is a daily chart of a stock called alarm.com. And a cup and handle is characterized by an upper horizontal trend line acting as resistance. Price is rejected, in this case, 1, 2, 3 times. And then kind of like a saucer, we have a U-shaped, parabola-shaped line acting as the cup, and then a secondary smaller one acting as the handle. Okay, and then similar to all the other ones, we buy on a close above the upper horizontal trend line. Okay. So this one we came away with about a 30% gain in about a month, not bad. And now what I'm seeing on this chart is a saucer pattern. So here's another trade idea for you. Let's see, we close above 107.5 or 108. That's a good buy, I think, for alarm.com. Now, and I think prices in this one could hit 120 at least, probably even higher, but I'd say pretty conservatively 120. Now, let's talk about stop losses very briefly. We always want to set stop losses within 7 to 8% of our buy point. Yours might be different. As a trader, that's your decision to make if you want to set stops at 5% or 10%. But I really wouldn't go more than 10%. And the reason behind that, I kind of alluded to this earlier, is that if we can be right 1 out of 4 times and still make money, assuming we cut our losses in the 7 to 8% mark, and assuming our average winner is around 30%, you only have to be, quote, right 25% of the time to still come out ahead. Now, I probably wouldn't take life advice from someone who's only right 1 out of 4 times, but we're dealing with the market here. We're not dealing with an individual. The good news is that we're right about half of the time or even more. I would say even more, probably in the 60 to 70% range. But, you can see how the numbers add up in that respect. And sometimes, stocks gap down and you end up taking a 15% loss or so. And that's just part of the game. When that happens, position sizing becomes paramount, right? So one of the things that I say for traders, especially if you're new, divide your account by 4 or 5, your account size by 4 or 5. That should be your trade size. Okay. You don't want to bet all your chips on one trade. Sometimes it works. And I know there's a lot of new traders in the market right now who I welcome with open arms. I'm so glad they're participating in this market. But I just hope that they're managing risk properly, because I know when I started, about 9 years ago, I had some initial success. It gets to your head. You start making bets that are too big, not managing risk properly, and then you get burned. There were times where I doubled an account in a year, lost it all in 3 months. That's very damaging to the psyche. And we control for that by allocating our position sizes appropriately, okay? And in my experience, I found that dividing your account by 4 or 5, so each trade should be around 20 to 25% of your total account value. If you're in a speculative account, we're not talking about your retirement savings. We're talking about speculating, trading to make money in the short term, okay? So this was a good example of a cup and handle. Let's talk about an ascending channel, Upwork. So we have a couple price patterns on this one. This stock has been very rewarding for us and our subscribers. We first put the stock on our radar back in late September of 2020. We noticed a saucer pattern, once again characterized by an upper horizontal trend line acting as resistance, and then a parabola U-shaped secondary portion of the pattern. We issued a buy signal on a close above the upper horizontal trend line. That was achieved. Now look at what happened here. We broke out above it. We came back, and this was basically, this retracement was a retest of former resistance, then turned support. And then what happened? We gapped up higher, and we ended up coming away with like a 60% plus gain back earlier in the year, or I guess back in 2020. And then we issued a sell signal in mid-November, and the stock pretty much did nothing for the next 2 months. Yeah, it went up a little bit, but when we started the year in January 2021, Upwork was basically where it was when we sold it. And if I didn't mention, this is a daily chart, by the way. So as we kept watching the stock, we noticed that it was starting to coil within an ascending triangle pattern. Or excuse me, this is an ascending channel, not an ascending triangle. My apologies. So I said, maybe we should probe the long side again. And we did. We issued an alert for subscribers at the end of January, and we're up about 30% on that right now. So we're currently holding this one, and I think it keeps going higher. This is a good stock. I like it. Let's look at a descending price channel. Okay, this is an example of another stock that we own right now, Riot Blockchain. Okay, so the descending price channel is when prices trade below two descending trend lines, and it's representative of a contraction of volatility. Remember, markets move in cycles, just like price. Okay, volatility will expand after it contracts, and it will contract after it expands. It's not linear, it's cyclical. Okay, so let's talk about another concept when it comes to trading. Do you want to be right, or do you want to make money? So it just so happens, we made a lot of money on crypto last year, to say the least, and we're still exposed to it. But I'm going to be honest with you, I had 1,000 shares of this stock last year, and I only have a couple hundred. So that hurts a little bit. But I started buying the stock like in April or March of last year when it was around like $2. But now it's at 50. So I wish I still had those 1,000 shares. But you know what? You can't win them all, right? But the point I want to make is that I actually thought crypto was going to pull back significantly in January. All right. And I was looking at a decline maybe in the 30% area. So, that was when I reduced some of our holdings on this. But I had a backup plan, because this isn't a bull market. Look, it's higher highs and higher lows. Each subsequent high and each subsequent low is higher than the previous one. So yeah, that was my opinion, was that I thought crypto was going to pull back. But I said, if we close back above this mark, I'm going to get long again, because it's in a bull market. I didn't care about being right. I want to make money. That's why we're in the business. And you'd be surprised the amount of trader and quote professionals that want to be right at the expense of making money. So we had this on our radar. We sent out an alert for subscribers to the elite service. And we said, hey, we identified this descending price channel. If we close this gap here, let's get long again. So we ended up buying around 22.30, and we're up over 100% in about, I think it's not even 2 weeks. So this is what I really call hitting a lick. All right. Big winner for subscribers. All right. This is an example of a bull flag. You can make a case this is a pennant. This is a grow generation. This is a daily chart, GRWG. Symmetrical triangle is an upward trend line that's downward sloping and a lower trend line that's upward sloping. But this surge higher here, to me, is a flagpole. Okay. And this is another example of one we sold a little bit too early, but we still came away with a 67% gain or 60% gain in a matter of 2 weeks. So, we bought right here. There was a gap right here. We wanted to buy in that gap close. We bought there, ripped higher about 60% in a couple weeks. Nice winner for subscribers. Ascending triangle. So on this one, this is Fate Therapeutics. Ascending triangle is characterized by an upper horizontal trend line, once again acting as resistance. The lower trend line is upward sloping, acting as support. We want to buy on a close above the upper horizontal trend line. So this weekly chart of Fate Therapeutics, we issued a buy alert for subscribers in late August, early September. Came away with a 60% gain. And admittedly, this one really hurt, because the week that we sold, the stock gapped up higher an additional 50%. So that one hurt. But again, I'm not going to be upset with a 60% gain at the end of the day. Would it have been nice to have a 100% plus gain? Yeah, but you know what? Hindsight's 2020. Right now, the stock is consolidating again. It probably will go higher, but I think there's some better opportunities out there, especially after a move that this one has shown. All right, descending triangle. This is another stock that we currently hold for subscribers. And this one is characterized by a downward sloping upper trend line. Okay, notice how the trading range of the stock is getting smaller and smaller. That is representative of volatility contracting. Remember what I said, volatility contracts before it expands. Volatility doesn't have to be to the downside. It can be to the upside as well. And then we have the lower horizontal trend line representative of support. So we see how prices bounced off this price zone 1, 2, 3 times. Now, this is a unique pattern where I don't always buy on a break above the upper trend line. And the reason behind that is you'll notice right here where my laser pointer is, there's an additional level of resistance. And even more importantly than buying on a break above a on a break above a trend line, is buying on a break above resistance, because we're breakout traders, right? So that is why we issued the buy signal on this channel advisor stock. This is a daily chart. Ecom is the ticker signal. I think the buy signal was on a close above 1870 or so. And we're up about 50% on this one too. So this has been another very lucrative winner for our subscribers. So enough for the chart patterns. I bet you're asking yourself, Gianni, this is great. Chart patterns are important, but how do you find these stocks? Well, I look at a lot of charts, and I have a way to narrow them down, and we're going to talk about that a little bit here. But there's basically 2 approaches to this. I look at it about 1,000 charts a week, but it's not all stocks. I trade futures too. So, I'm looking at the price of corn, cattle, crude oil, T-notes, stuff like that. So you could look through 1,000 individual stocks per week and take notes to see which, what sectors or what themes are displaying strength. You could do that. I would call that a bottom-up approach. Or you could do a top-down approach, which is what I like to do. I like to look at the broader trends in the market and narrow them down. Are we noticing strength in stocks or bonds? Are we noticing strength in tech or energy? And then keep narrowing it down from there. Okay. So there are 4 main asset classes you want to watch. That's currencies, rates, and or bonds, stocks, commodities. And you know what? We're at that point where we need to start talking about whether crypto deserves to be considered its own asset class, right? In theory, you could just call it a currency, but it's not a fiat currency, right? It's backed by energy. So that's something that I'm mulling over with respect to my own economic theories, is whether we want to consider crypto a main asset class. So keep watching these webinars. I'll let you know sooner than later. But we look at currencies and interest rates and bonds like that because that helps us narrow down which countries to invest in. Do we want to be long Japanese tech stocks or Canadian, mining stocks, stuff like that? That's how a hedge fund manager looks at the global marketplace, right? But for all intents and purposes, and for the purpose of this discussion today, we're going to assume we're trading the U.S. markets, because after all, the U.S. is the largest and most liquid market in the world, the best market to trade. So what we do is we, can assume we're trading in the U.S., and then we're going to look for the strongest performing sectors in the U.S. And those have been tech, communication. A lot of times that falls into the category of internet stocks. Biotech's done well, consumer discretionary, those have done well. And then we dive deeper, and we look to see what are the strongest performing stocks in those sectors. Well, you probably know these ones, your Teslas, your Amazon, your Apple, crypto is another strong performing sector. So you got your Riot blockchains, your Marathon patent groups. Those stocks have been booming. Your MSTR, what's the name of that company? I can't remember. I know the ticker symbols better than the names, such as the nature of being a trader. But the important thing with this is relative strength. Okay, I said we would come back to this earlier on, and here we are. Relative strength. What is the fuss about relative strength? Well, if your goal is to outperform the benchmark or the index, you're going to want to be long the strongest stocks within the strongest sectors. That's the easiest way to beat the market. The market is an average. It's a composite of all the stocks. But if you want to outperform the benchmarks by 2, 3, or 4 times, you need to buy the strongest stocks. It's that simple. Like I said, you can be lured into buying low and selling high. But guess what? If you buy high and sell higher, you'll get faster results and you can usually manage risk more effectively. Trade with the trend. Remember what I said, the trend is your friend. If we're getting long, we're going to make sure a stock is in an uptrend. There's no reason to buy a stock in a downtrend unless you're trying to swing trade, which you could, but I mean, why not just short a stock in a downtrend? It's that simple. Keep it simple. KISS. Keep it simple, stupid. Okay. All right. So I want you to take note of this slide here. This is a slide of all the spider ETFs. And this is one of the things that I use to search for relative strength under the hood of the market. And the next slide will explain how in a little bit. So we have the 11 spider ETFs, and they cover the general sectors of the market. So we have XLC communication, XLY consumer discretionary, XLP consumer staples, XLE energy, and that's conventional traditional energy, XLF financials, XLV healthcare, XLI industrials, XLB materials, XLRE real estate, XLK tech, XLE utilities. Welcome to the world of ratio analysis, okay? So I conduct this type of analysis on stockcharts.com, and I'm not paid by them or anything to share that. That's just what the charts that I've been showing you are from. That's where they're from. And what we do with this type of analysis is we take the ticker symbol, we put a colon in between it, and we put it in front of the SPY or SPX or whatever, okay? So what is this chart here, which is a ratio chart? What does it tell us? Well, this is the ratio between the technology ETF and the S&P 500. We see that this ratio is rising. This tells us that the technology sector is outperforming on a relative basis against the S&P. So if you had to invest your money, you would be better off buying XLK instead of SPY in accordance with this chart. Now, when this ratio is rising, it tells us that XLK is rising faster or more than SPY. It also tells us that if XLK is declining and SPY is declining simultaneously, it's declining less. That is the key. So relative strength, we look for the stocks or the sectors that hold up the best in the face of market weakness, because that tells us that there is greater institutional support in that sector or stock. So when this ratio is falling, there's not very many examples here, but when we see it like here, this is late 2018, when this ratio is falling, it tells us that you're better off investing in the broader market than tech. It can tell us that, you know, SPY is rising faster or more than XLK, or it's falling less than XLK. Okay, so nuance is important. Chart patterns still apply to this ratio analysis method or technique. Okay, so this is the ratio between biotech and the S&P. So what chart pattern do we have here? We covered it earlier on in this presentation. It's a saucer pattern. Nope, it's a rounding bottom. And definitions matter. A saucer pattern is something that we see in an existing uptrend. But going back years, because this ratio goes back to early 2017, this was not an uptrend until late 2020, I would say. And it really became an uptrend when we broke above this upper horizontal trend line acting as resistance. So a rounding bottom and a saucer are going to look the same for all intents and purposes. You have the parabola U-shaped and then the upper horizontal trend line, but definitions matter. A saucer pattern is something we see in an uptrend. A rounding bottom is something that we see in a downtrend. It implies the end of a downtrend. That's why it's called a bottom, right? So higher highs and higher lows. We broke above the upper horizontal trend line. This tells us that there's been tremendous outperformance in the biotech sector. And some of the biggest winners in the market the last year or so have been biotech. And even some of the examples of stocks that I showed here today were biotech stocks. So no surprise there. This also enables us, this ratio analysis, to spot emerging trends. Okay, so now we're looking at silver miners against the S&P. So what do we see here? We see a broadening bottom. We talked about a broadening wedge earlier, but now this is a broadening bottom because again, this ratio was in a bear market. The final low was in March 2020. Once we broke above this upper horizontal trend line, acting as resistance, look, we retested it, form a resistance, turn support, and now we're trying to form a significant higher low. So we had a little teaser of the silver stocks and silver as a commodity in the last couple weeks, where we saw silver rip to 7-year highs. We pulled back, shook out a lot of the weak hands, but as long we seem to be consolidating much of those gains. So as long as silver can keep trending sideways, I think it's still constructive from the long side. Stay tuned to our reports. We do have quite a few silver mining stocks that are on our radar, and again, we're focused on the strongest ones. You can look at this ratio. It's down big time. Going back to late 2016. But there are some silver stocks out there that are already at all-time highs. And those are the ones that we've been focusing our buying efforts on. Okay. We want to be along the strongest stocks in the strongest sectors. I'm going to keep saying it. So now we looked at an example previously of sectors against the S&P, but let's take it a step further and look against individual stocks against the S&P. Strongest stocks within the strongest sectors. This is the ratio between Riot Blockchain and the S&P. Okay. Again, Riot falls into a strong sector, crypto, outperforming the S&P significantly. And Riot is one of the few and one of the strongest outperforming stocks within that sector. And what do we see here? I mean, this is a huge rounding bottom. I mean, I think crypto keeps making new highs here. I do anticipate a high of some serious significance to form in the cryptocurrency market late 2021, perhaps early 2022. But I think the punch bowl is still here. And one of the biggest things when we're in a market environment like we're in now is when the getting is good, you really got to get it. Okay, and then you got to protect what you made, and we do that by managing risk and minding our stop losses. So we've made tremendous returns on these crypto-oriented stocks. Riot, we put out Marathon Patent Group to our elite subscribers last year, ended up gapping up above our buy point. But for those that chased, we kept following it, and they still came away with a nice return. But yeah, this is it's interesting. I mean, I saw earlier today that the country of India, their government, put out a bill in the lower chamber of their legislative body to ban private cryptocurrencies and to make their own sovereign cryptocurrency, basically incorporating the blockchain technology into the cryptocurrencies, into their own national currency, their own sovereign currency, which I think is the greatest risk for the crypto sector overall. The blockchain technology is not going anywhere. And I think, we're at that stage in this industry where, the politicians basically are allowing innovation to take place. But I think the biggest risk in the sector is, regulatory risks. But that being said, the getting's still good. You got to get it while it's good. It's a great opportunity to make money as long as you manage your risk and, respect the trend and always have a contingency when, a market's not working out in your favor. All right, let's talk about looking for signs of accumulation. I showed you some examples of that earlier, but we want to be in stocks where there are more buyers than sellers, because that means rising prices. When there are more sellers than buyers, there are falling prices. If we are buying breakouts, our emphasis is on stocks that are showing signs of accumulation. And as many of you probably know now, thanks to the events of the last couple of weeks, short squeezes are our friends too. That gives you an opportunity to make a bunch of money on the upside when the shorts have capitulated. Because what happens when the shorts close their positions? They have to buy the stock back. And that creates a waterfall effect where, there's a bunch of people heading for the exits and you have so many bids happening at one time, the stock surges higher. And we use the 20-day exponential moving average as, an indicator. If we start to see, volume trend above the 20-day exponential moving average, it's usually a good sign to us that some sort of accumulation or even distribution activity along those lines activity of importance is taking place. Okay. So let's talk about actually timing the breakout. Let's look at a live example. We're going to analyze Ethereum on the next slide. And time is so important. Time is not money. You hear this say, time is money. No, it's not. Time is its own variable. Time is precious. Time is finite. We all have a fixed amount of time in this life, right? The money and this fiat monetary system that we live in is infinite. The central bankers can just keep printing it. I'm not saying that's good or bad or should or shouldn't be. It is. I didn't make the rules to this game, everyone. I was born into this world just like you were. We didn't make the rules. And it's one of those things, you don't like the game, don't play. That's why I got so upset, when the exchange or the broker shut down the short sellers or the buyers, on AMC and GME. We're all adults. I get, that they try to help out people, but they don't stop people from, gambling away their homes on sports betting. So now we're going to stop it in the stock market. It just seems kind of silly to me. But I digress. Anyways, an improperly timed purchase of a breakout can damage your risk reward ratio. I generally don't like to trace stocks that have exceeded my buy point by 6%. Closing prices matter the most. Rookies trade the open, pros trade the close. I'll repeat that and listen very carefully. Rookies trade the open, pros trade the close. The only time I trade the close really is if I'm exiting a position and I'm trying to take advantage of the less sophisticated investors. And I don't mean take advantage in a predatory sense. I mean, it's a market after all. Someone's got to buy the shares that I'm selling, right? And that's what this game is all about. We're all trying to make money. We don't care about being right. We care about making money, okay? And if you don't believe me that institutions trade at the end of the day, I mean, look up an intraday chart of, any stock and you'll see a spike of volume at the open and a spike of volume at the close. So let's talk about some definitions real quick, and then we'll look at a live example of Ethereum. An upside breakout occurs when a market closes at a new high above a level of resistance or above the previous highest closing high. The downside breakout is just the inverse of that, okay? So it occurs when a market closes at a new low underneath a level of support or below the previous lowest closing low. And the nuance here is that there can be different breakout price points for different breakout time points. So a breakout on a daily chart might not be a breakout on a weekly chart. A breakout on a 2-hour chart might not be a breakout on a daily chart. Again, the nuance is important. Okay, so let's take a look at a live example of Ethereum. Okay, so going back, we've been doing these webinars pretty much on a monthly basis going back to like July, I think. And back in July, we identified this ascending triangle price pattern here in Ethereum, and we've been giving the buy points out for free. So pay attention, take advantage. But how do we come up with our actual buy points? When I say stated buy point of 250 on Ethereum, where do I come up with that number? Okay, so we look at the highest closing price within the price pattern. So we identify an ascending triangle price pattern. We go in and we look at all the highest closing prices within this price pattern, and we see that the highest close of this price pattern was $248.48 or 44 cents. Let's keep it simple. We can just say a buy point and a close above 250. That was achieved right here. It ripped higher. We then consolidated for a few months. Another price pattern formed. We saw a saucer this time. Okay, what is the highest closing price within this saucer pattern? It was $275.99. So again, let's keep things simple. We can say let's get long on a close above 276, and that was achieved on November 2nd. That would have been a very, very good entry point. Okay, because we pretty much tripled at least, a little bit less into the January high. And then remember what I said, I got a little bit bearish on crypto. We sold right at the high, 350. Okay, we then consolidated. We formed an ascending triangle price pattern. I started to think, maybe I'm wrong. Maybe this keeps going higher. So I said, you know what? The highest close within this pattern is $13.92. So let's buy if we close above that. And we did that. We closed at I said the buy point was going to close above $13.95. We closed above that. We ended up closing like at $14.20. whoopity do, and we're about $400 higher from that. So that is how we identify the buy points. So with that being said, I think I'm going to let Neil chime in a little bit here to tell you a little bit about our services, because if you like what I had to share today, and I hope you did, I'm giving you access to this knowledge and this information to make money in the market. We don't care about being right. We care about making money. We're giving you an opportunity to earn while you learn. I'm totally transparent in my process. I tell you the rationale and the reasoning behind all of the trade ideas that we put out. We give you actionable trade ideas. We give you a buy point, a stop loss, and we're educating you based on our picks. So we'll say, hey, we like Riot blockchain because we see a descending price channel, volumes trending above the 20-day EMA, and it's one of the strongest stocks within the strongest sector. So let's get long on a close above 2230 with a stop loss on a close below 21. If you like that, if you want that information sent directly to your email, let's let Neil explain the rest of that.
All right, Gianni, good timing because we are getting a lot of questions about the subscription. One thing that I want to do really quick, guys, if you guys see that subscription link, go ahead and drop it in the chat for the others that haven't seen it yet. And while you're doing that, I'm going to go ahead and look for it so I can get it to you, yada, yada, yada. So what we're doing right now is giving 30% off the 3 levels of Gianni's Breakout trade subscription. So we break his subscription into 3 levels for a reason, because the markets are volatile. All right. You can do very, very well with just a few very, very good trades. All right. And you can do very, very well if you're paying attention to the research and the education that Gianni is delivering on a regular basis. So the idea here is that you're learning along with Gianni as he trades, but you're also earning while you're learning. So we start that off, that subscription tiering structure off at 1 trade a month. So I'm going to do a little screen share here for you guys. So Gianni, I'm going to steal it from you. Gianni, do you see what do you see?
I see the 3 tiers and the
Good.
prices.
Okay, good. So you see number 1 monthly, number 2 weekly, number 3 elite. Take a look at that, folks. This is really where you want to start. It's 30% off today on all of these. All you have to do is click the link in chat and get to them. And this is where you're going to get the full trade setup that Gianni is using. You're going to trade along with him. Does he win every time? No. We'd be lying to you. We'd be disingenuous if we said that he did win every time. I think he just covered a bunch of great trades because he's showing you breakout patterns that work. But again, guys, this is about a trading strategy where you need to be right 1 out of 4 times in order to maintain a margin of profit. So this is a fantastic strategy for anyone to have. This is fundamental. I absolutely love it. Full disclosure, I do trade along with Gianni. I use his picks all the time. So that's something that I want you guys to know about. This is very accessible. It's a good backbone for beginner and veteran traders. So if you start out at that 1 trade a month, you can click through after the checkout, and I highly recommend this because, guys, if you buy today, we're giving you a 14-day money back guarantee. So if you get just the monthly trade, you might not get it within that 2-week period. So I highly recommend just go ahead and grab 1 and 2. Get the monthly and the weekly. If you time it right, you'll get 5 trades in. But for sure, well, you want to get 5 trades, but you'll get a maximum amount of trades during that 14-day period, so you can actually try them out. Do you like the way Gianni explains things? Do you like the way that his research speaks to you? Can you understand it? Can you learn from it? Can you use it to become a self-sufficient trader? And do you like his setups? Are these stock picks working? If he gives you a stock and you use a stop loss and use a sell target, are you able to make money using the content that Gianni is delivering? If you like it, stay with us. Welcome to the family. We love you. We've got thousands of subscribers, and I think we're just now about to have our 1-year anniversary, yeah. Gianni. So we haven't even been together for a full year, and we're cooking on gas. So what I gotta say is just at least get 1 and 2 to get the bang for your buck. If you don't like it, no questions asked. Just let us know. We'll cancel it, full refund. And then you can come to the next webinar for free and just learn from Gianni. It doesn't matter. But if you really want to get the full thing, if you're going to be able to actually look at your phone or whatever device you trade on, at least I would say like 3 to 4 days out of the week, maybe more than that. If you're at least able to glance at your device, what your brokerage is on, for 10 minutes a day, something like that, just 10 minutes, seriously, then I recommend getting the Elite, which I have up on the screen for you, where you're going to get an additional 3 trades, high conviction trades, high momentum trades per week. So that comes out to a total of 18 trades. So what I'm going to do now, I like to help folks out a little bit with this, is just go through the checkout process, because that link that we gave you, it links you to tier 1. And then after you make that purchase, then you've unlocked the ability to get tier 2. And then so it follows for tier 3, the Elite subscription. So I'm just going to walk through that and make it super easy. I'm going to take my checkout off of the screen really quick, so that you can't see the credit card number that I'm using. So just give me 1 minute.
Neil, I want to mention another thing. I had a subscriber reach out to me this past week, and he's a subscriber to all 3 tiers of this product. And he was new to trading. He started trading last March. I think he signed up for our service back in April. And he reached out and he's like, hey, I just want to say thank you because I've made over $70,000 trading alongside you in the last, not even year. And, he was asking me, he's like, well, should I like pay off my mortgage or whatever? And I was like, I mean, that's up to you, man. He's like, well, I want to protect this money I made. I said, well, if you're using your stop losses, then in theory, that money should be relatively safe. So, and I told him, I was like, I want to make sure you're learning. And, so we're really speaking to the whole concept of being able to earn while you learn. And this was someone totally new to the market, started trading, and they made over 70 grand, not even in their first year trading.
Yep. And so guys, and what I want to reinforce too is this is not necessarily about making money. This is about learning. This is about having a structured system. This is about setting up better trades. So if you guys aren't totally convinced after watching Gianni go through his setup from the presentation, I highly recommend grabbing at least tier 1 and tier 2. That's the monthly and the weekly, so that you can get some trades within that 14-day money back guarantee period. So I'm going to share my other screen really quick. So we're going to have to go to, it would be this screen. So you can see that after you do the first one, you've unlocked like the second page so that you can get the 4 a month, which is really, it's 1 trade a week, with all of the research, the education that comes along with that. There's an email alert every time a trade comes out. There's a membership site that you log into for more in-depth research and content from Gianni, and then also more links to webinar sessions that are only for subscribers. On top of that, we are adding text message alerts. Very soon. We've already partnered with the company to help us do that. Everything's in place. So we're just getting ready to deploy that out to our subscribers. So if you're a subscriber to Gianni's Breakout trades, the second he puts a trade out, you'll get a text message alert, brief description of the trade, get a link in the text that you can tap, and it will take you to the membership site so you can get full details, the chart, the pattern, the explanation, all of his factors that went into his decision making. And so this is that second tier, to add 1 trade a week, and all you got to do is just click the button and it will just automatically add that to your order. And then of course, after this page loads, don't do anything while it loads, just let it resolve. You're going to get to the Elite trade. And once again, it's heavily discounted. This is for a full year and it lasts a lifetime. The discount is a lifetime discount, off of that 547 down to about 380. So that's how it works. It's a tiered system. We don't want to just let you out of the gates into the back end, into the elite. It goes 1, 2, 3. And if you guys have any questions about that or any concerns, or if you don't like the service within the first 14 days, let us know and we'll give you a full refund. And as always, with all Benzinga subscriptions, services, and products, we give you real human, almost 24/7 support. So we're there to help you out and make sure that you're getting absolutely what you expect to get, and hopefully more. All right, did I do a good job, Gianni?
Fantastic. Couldn't have said it better myself.
All right, so we're about 1 minute over. Gianni, is there anything that you would like to leave folks with as we close the session?
Yeah, I like to give those viewers some of the best trading books, the names of the best trading books that I've read over the years, because that's where I learned a lot of this. And theory is one thing, practice and application is another. But there is technical analysis of stock trends by Edwards and McGee, technical analysis of financial markets by John Murphy, intermarket analysis by John Murphy. Then you have How to Make Money in Stocks by William J. O'Neill. And then there's the ultimate book on stock market timing, volumes 1 through 5 by Raymond Merriman. That's another excellent series as well. So those are the trading books that have influenced me the most and contributed most to my methodology and success trading in the market. So with that being said, that's all for today. Thank you so much for watching. I hope to see you inside of the Benzinga Breakout Series reports. And if you ever got any questions, just let us know. We're happy to help. And let's all make some money together. That's all for now. Take care.
All right. Thanks, Gianni. And then, Gianni, I'm going to go ahead and let you exit the session, and I'm going to leave it open for just a few minutes so folks can get the link in chat. So thanks, man.
Thank you. Bye-bye.